So how big of a deal are earnings going to be to the markets and your investments? Jim Tierney is Bernstein CIO of U.S. Concentrated Growth and joins us on set. Jim, welcome.
Thank you.
Still early-ish. Overall, have you been happy with the earnings numbers?
Really good earnings number. And something important happened between the second quarter and the third quarter.
Okay.
Estimates actually went up. So it's not like we're setting a low bar and we're jumping over the low bar. Estimates went up over the last 3 months. And the bank results were fantastic. We're starting to see some healthcare results that are good. And Coke's numbers and GM's numbers, as you talked about, really good.
Are you surprised by how strong some of these numbers and guidance has been?
Yes, and it shows you that there's more to the U.S. economy than just the AI trade, which I think is important.
It's amazing. Are we allowed to say that? But it's an excellent point. AI is getting all the headlines, deservedly so, or at least getting most of the headlines. But guess what? 3M and Coke today, General Motors, we just talked about, proves that maybe this is an economy doing better here and abroad than some think.
Absolutely. And I think that will allow the market to broaden out and allow the markets to go higher.
Does that economy, does that spending benefit a MasterCard?
Absolutely. The U.S. consumer continues to be incredibly strong. The interesting thing about MasterCard is when the banks report earnings last week, they show you the card spending data. So we know that spending accelerated in the third quarter versus the second quarter, which means that MasterCard probably has good numbers.
And MasterCard, Visa, and Amex, for the most part, are taking a little bit of a, I think they would call it a VIG.
Exactly.
In some circles. Are you bullish on Visa and Amex also, or is MasterCard its own thing?
I think both Visa and MasterCard are in a really good spot. You look at the services that they're providing, both companies, it's becoming a bigger and bigger mix of their business, and that is growing in the high teens for both companies.
You also are bullish on Schwab. Interesting. Schwab does have a bank. By the way, Schwab is a bank. They've obviously got the trading platform, asset management, wealth management. This is a multi-trillion-dollar company.
Yes.
Schwab. It's huge.
More than $10 trillion.
What do you like about it?
So
Besides the $10 trillion in assets.
So the retail investor is incredibly engaged. That means more trading activity, which Schwab monetizes. It means more margin borrowing, which they monetize. The cash sorting, which was a big issue a year ago, is now behind them. They're under $15 billion of borrowings, and that's about the stable level that they want, which means that they can return cash to shareholders via buybacks. With the stock at 18 times next year's earnings, those buybacks are going to be incredibly accretive. And then finally, and nobody's really talking about this, they're getting into crypto trading, cryptocurrency on their platform. And look at what it costs you to get in and out. It's a very high margin business for the players today. They are going to disintermediate that market like they always do, and it's going to be very profitable for Schwab.
And yesterday's outage of Amazon Web Services, which affected trading, it affected people's ability to pay for lunch, whatever, not affecting your ability to recommend Amazon.
I think there are two things going on at Amazon that people are underappreciating. They've been capacity constrained on the AWS side. They're bringing more capacity on in early 2026. That will drive accelerating growth at AWS. And then on the retail side, the robotics stuff that they're working on is unbelievably powerful. They're going to lower their cost to deliver each and every package, which either drops to the bottom line or lets them cut prices and become even that much more competitive. And Amazon is flat year to date, whereas most of the rest of the Mag 7 is up a whole lot at a mid to high 20s multiple. That's just way too cheap for the growth that they're providing.
There you go. MasterCard, Schwab, Amazon, Jim Tierney, Bernstein. Really appreciate your views, Jim. Thanks for coming in.
Thank you.